Saturday, November 3rd. That's right, November is here already. It's November 3rd, 2018. I'm Justin Costelli. This is All About Your Benjamins. And this is your weekly mixtape and weekend review video. We're going to get right into the news. Trying to keep this short and sweet this week. On Friday, unemployment numbers were released, and they were good numbers once again. So unemployment locked in at 3.7%. No change there. A very low level, which is a good thing. And the interesting number was the wages have gone up over 3%, 3.1% over the last year, an increase in wages, which is the highest since 2009. So if you've been watching these videos over the course of this year, we've talked about wages going up and what that might mean for inflation and the Federal Reserve. So we've talked about this a lot, so hopefully you know that this is one of the metrics that they're looking at, and as wages keep on going up, that allows the Fed to continue with their plan, at least I think, to continue with their plan to raise rates. So we should probably see another quarter point rate hike in December, as they've said they're going to do, regardless of what comes out of Washington. So we'll keep an eye on that. Don't need to spend a lot of time on there because there wasn't a lot of change, but the wage number was a good number, and it's good to see people making more. Hopefully we don't see that leading to prices ramping up to where it negates itself. Friday morning, it was announced that we had had a conversation with China, and it was a good conversation. Friday afternoon, it was announced that we may not be as close to tariffs as we thought, which would kind of go against the good conversation, or maybe the conversation was had, but not really as good as it was said to be. Who knows what's going on? But there was supposedly a conversation. It sounds like we're still going to be meeting with China in person at the G20 meetings, but we may not be making any progress on the tariffs. So the market didn't really know how to digest that, which is why one of the reasons why you may have seen the market go up on Friday and end up down as this new information came. Maybe we're making progress, let's get excited. Oh, maybe we're not, so let's just sell back off and go back to where we were. So we'll keep an eye on that. Obviously that's a big thing. We're starting to see this tariff begin to make its way into where we're going to be feeling it as consumers. We're seeing earnings projections come down because of higher input costs. Eventually those higher input costs are going to mean things at the store are more expensive for you and I, and again that ties into inflation. So obviously worth watching, obviously worth keeping an eye on, but that's where that stands as of this week. As of this week, we started the new week. The market started November off like it was ready to shake off October. Weren't we all ready to forget about that? So the market started off great, the month off well, and then kind of Thursday and Friday kind of petered out and didn't do very much. So not that I want to spend a lot of time, but you guys are all looking at your investments. You're probably reading in the news, seeing what's going on. So that's what happened. We've got the primaries coming up on Tuesday. That's obviously going to have a potential impact on the market. So a lot of market professionals aren't really doing much before Tuesday's elections. After that, we'll have a better idea of where things are going to settle in Congress, and then we'll move forward and have a better idea of what might happen for the rest of the year. So a lot of good coming out at the beginning of the month. Nice to see the month start off well after a bad October. But really with these primaries coming up, not really anything that I would say you could hold your hat on and say this is definitely the trend and things are ready to go back up. We've got to see how this settles out. Speaking of the market, not anything that you should really be interested in too much, but I thought I would bring it up. GE announced that it's going to be cutting its dividend to 1 penny per share. And I only bring this up just to highlight how silly Wall Street could be from time to time in the investment world. So GE has been struggling for years, not doing very well as far as its stock, and it cut its dividend to 1 penny. And I put this out on Twitter, what's the point of a 1 penny dividend? And I got a lot of the answers of what I thought people were going to believe, and it's basically just for appearance. That GE can say that they've always paid a dividend, they've never not paid a dividend, or for however many years they've done it in a row, I don't know, but appearance. We paid a dividend this many years in a row, we can remain in a dividend paying ETF or fund. It's really not any value to the shareholders, and honestly I don't know how much value keeping that penny internally in GE would do to fix it. But as I put out there as a shareholder, if I were a shareholder in GE, and this is not a recommendation, but if I were a shareholder in GE, I would much rather see them say, if we're going to cut the dividend, cut it all the way to zero, we're taking everything that we can, all of our resources to fix this thing and get it going forward, but instead they wanted to have that appearance of having a dividend. So again, not anything you should be worrying about and going out of impact on, but just another highlight of why Wall Street can be so silly and why picking individual stocks is not an easy thing to do, going to our diversified portfolio of funds across the globe. So that's all I have on the economic, investment, finance standpoint. We'll finish up with the Red Sox won the World Series. I didn't watch a game, not a huge baseball fan, but that was a good piece of news to kind of break away from all of the other headlines. And I lied to you, I'll bring back one other finance thing, but this is actually something we have control over. So the IRS announced that they are going to be increasing the 401k and IRA limits for 2019. So beginning 2019, you will be able to save $19,000 a year in your workplace plan of a 401k or 403b, and in your IRAs and Roth IRAs, you'll be able to do $6,000. If you are over the age of 50, your catch-up provision, so the additional you're allowed to make, stays the same. So on the 401k world, it's still $6,000, so you're up to $25,000 a year that you could save. And on the IRA world, it's a $1,000 catch-up, so $7,000. But nonetheless, the numbers went up from $18,500 to $19,000 and $5,500 to $6,000, and that is something that we can control. That is something that we can use to offset some of the concerns of the market. If we put more money into these accounts, then our reliance on market performance begins to dwindle some. Not that we don't need it, but if you put more money in, you don't need as much for that to compound to get further along down the road. So save as much as you can. The final comment, I mentioned primaries on Tuesday. Make sure you go vote. Whatever party you're in, just go vote, because that's what we need to be doing. And that, be sure to check all of the Mixtape articles and blog posts below. Another great week. Check those out, and be sure to subscribe to All About Your Benjamins. Make sure you don't miss these videos, miss the blog posts, don't miss the podcast and videos. A lot of stuff coming at you, so make sure you sign up to keep up to date with everything going on. And with that, I'll let you get your weekend, and we'll see you next week on next week's Weekend Review video. Have a good one.